What's going on, YouTubes? Time for a recap. So if you followed the X today, we had a couple different things we were looking at on the short buy scale here. So posted this 9 hours ago plus, and we said we'll be watching for a short open to drop SPY back to yesterday's highs to fill the common gap and hit 600 area support per our YouTube watch yesterday. So if you watched the last YouTube video, I said we would come up to 600. And because we did not hit 600 on SPY yesterday, it doesn't matter if we were above 600 today in pre-market or below 600 today in pre-market. We were going to come back regardless to 600. That was the trade call off the last YouTube. I'll put it in the description if you want to check out my last YouTube video in the link. So we posted this up and I said I'm shorting everything into this lower high. I gave the entry right here at the start. So I draw these little red candles, green candles, and targets for my chat here for a bias to look for, right? So I've seen a couple different actives right here at 601.20s, activated trade right here short, and opening short target is obviously what I just said, into yesterday's highs. Also on the futures here, went over a nice one here, and we posted a picture here for my chat. We'll go over this trade in ES, and I said short up here. Now, I posted this for the chat 6:59 a.m. The entry came at 7:25 a.m., and then when we were here for my chat, I told them up to 35 points down, and we are targeting the 38.20 fib right here. Entry is way up here. We'll go over that trade. So called this way before it happened, and that's about it for the X. We just had some really monster trades. So let's go into what we had first. So we're going to go to the 5-minute chart here, and I'll show you a couple trades on SPY before we move into ES. Now, for the red candle drawn, as you've seen, I dropped pretty pictures for the chat here, and that's the play that we had. So I'm going to just delete all these little fair value gaps and supply demand zones. All right, so like I said in the last YouTube video, if we were here 600, right, and we had a 1618 no tag at 599.95, and that was actually at the small fib, right? So coming back down to this, we'll extend it so you guys can see it on the chart, 599.96. And quick recap of yesterday's video. Here's the algo. I told everybody above or below 596 would run. It will come up to the 1618. Notice here, did it hit the 1618? We drew the fib box here. High-low Fibonacci on the algorithm tail. Pushes up to the 1618. Nope. 1618, nope. 1618, nope. So we shied price action, right? It shied 600, never came into 600. High day right here of candle is 599.69. Algorithms did not hit its half whole dollar of 600. Now, as I just extended this pre-market tail fib into today, here was the biased, as I called on X before. Lower high in pre-market, short it down to 600. As I said in my last video, I don't care if we're above or below 600, the price action will go to 600. Okay, that is the magnet, right? So the 1618 was our target short, right? Now, I was shorting all pre-market. As we said in the Discord, we'll go over a couple plays in the Discord chat as well to give you an example of what we do here. But my shorts were all pre-market there, all lower highs we called right here, top of the tip. And this is the ES short. We'll go over here in a second, all the way down to 600. If we broke into the 100 fib, right? Yesterday's high-low applies. And we go to where? The first tag golden pocket. Check all the videos out on our live streams on Saturdays. It shows you exactly where the golden pocket is right here. 597.73 to 596.55. We assume we were going to hit the box of Fibonacci, which is our golden pocket from our math. So as soon as we failed 600 and we got under the 1618 no tag from yesterday's pre-market, as we spoke about, it opened here, washed out as expected, right to the GP. Now, this was only going to be a dip buy. I wasn't looking short unless we really started to fly underneath the golden pocket. And half candle retrace, which you see here in the orange dashed line, we pay attention to that half candle. Now, next trade, I'll show you here on SPY. Short the gold level tag and daily gap tag down to the 100 EMA 1 minute. Let's go to the 1 minute chart. This is one we had on our chat way before it happened again. And it sucks because I had appointments and I had to leave right at 10, and it was right on the double top, and I seen it right here, and I'm like, it's 10 a.m. I'm like, this is gone right here. I'm going to miss it 100%, and sure shit. So the gold level here is what I called out, 602.88. As long as we get under the 10 and under the gold, short it to the 100 EMA and below. 100 EMA for me is green. Here's the resistance check, double top, I already have this posted in the chat a million times. Short tag at the gold level and daily gap down to 100 EMA, resulting, I think it's about 14 points. So we said break here and then down to the 100 EMA. We got 12 and then down to that 200 SMA, which, we said VWAP 2, getting close to, but only wanted 12 to 14 points, even though it made 20 to the downside. Not a big deal. Now, at the end of this, I did say here, and we have a couple different gaps, algos to watch actually. I did say I was not looking for this to magnet to the algo to the gap here. So I was not wanting to see a daily gap fill on the double. Okay, so we're going to hide this study. And I assumed first tag gaps do not fill. So the double daily gap we were dealing with, one is the deep seek gap, right? And the other one is the regular daily gap from these two candles. As we zoom in, what's the low of 122, right, to 121? This is the gap we're talking about. So we take the 122 candle. What's the low? 605.36. What's the high of today? 605.37. That is a fill. So I did not want to see that fill. I wanted the price action to push into the gap, conk out, come down, and then FOMC, GDP, and everything else be the reason that we could actually come back and tackle the deep seek gap. But they were pushing bullish narrative and so on and so forth. It was pretty easy to grab support. It was over under 600 today on the SPY. So long story short, we didn't get the cool down at the end of the day. No big deal. I wanted to go back long, as I said in my Discord. I can bring over some of the chats here before we go over the ES trade. And I said we're going to short back to the 100 EMA. We also had the plan to go back long over the 100 EMA. So if you would have caught this short down, you would have waited until price action went back over the 100 EMA in the green, and you would have rode that sucker all the way pushed up into the gap. Anything over, under, right here, that's our prior level. That's the gold, right? So 603. And then off she went, came back, caught the 200, and then gap filled by a penny, because algorithms, they are freaking crazy, man. So no big deal. Why did we think short? I just want to go over this real fast before we pull up the Discord and the ES trades, the volatility index, the fear index, the VIXI. So we noticed we had a couple gaps here on the 5-minute chart as we came into the candles, right? And algos do not like to leave those. We have a couple of them, actually. Filled a few to the top side, but we had a massive amount, and I put my target right here, actually way back here. So we're going to talk about two things. We talked for my chat and the 2 YouTube videos ago how the standard deviation, see these giant yellow lines right here? That is the -1 weekly and -1 daily standard deviation coded into the 5-minute chart. So our standard deviation into the -1 area was consolidating for 3 days before the massive gap up of the deep seek. So it knew, right? A lot of good fear coming in. Now, on the way back down for the last 2 days, we have gap targets to the downside. I said, chat, watch everything down to 1556 and 1603. We'll probably target that if we fall into the gap. And then, of course, the rule is the gap usually doesn't fill first tag. And if we look at the VIX here, that high-end deep seek, falling into the gap, no fill, conked out. So if it wants to continue up with FOMC, we have further to go on the volatility index to come back down for that gap to push up on GDP, FOMC, and or PCE farm payrolls on Friday. We'll see which data block is the one we need to make that move. Now, to the Discord real fast. So our Discord, this is what it kind of looks like here. We like to give little examples here. We talk all Discord from like 4 or 5 in the morning, usually Central Time, all the way into the pre. And I gave out a lot of big targets here to look for on the back test. Now, I think we're way up at yesterday here. I want to note a couple things here from the takeaway where I said the short open. So I was talking about this way before 7:30 a.m., okay? We have posted the pictures. I'm showing my chat where to short, so on and so forth. No edits, all perfectly pasted, giving us the full breakdown of exactly what to look for on anchors. I posted these, and I said QQQ has over algo anchors that are going to be coming, and these are going to be your short targets out of the gate, down to 513.63 on Qs called, and down to 598.43 and 598 on SPY called, both from our algorithmic anchors. Those are first tag, no tag anchors that we need. Again, watch our do this every day setup, and it goes over first tag algorithms. We'll be covering more of those on our classes on Saturday. So tune into those if you want to see it. And again, the ES trade, the big one and done. Remember, I called this right down here about 7 a.m. and I said it's going to come up to this fair value gap and go short. It's going to go short right here, right above 60, 67-ish area. I gave the short entry. You can see me. I drew it way back down here. Came up tag. I shorted top ticked it, and I said the bottom would be 60.26.85. So I draw these pretty pictures again for the chat where the entry and exits are likely to be depending on the algorithms and what I see fit. So as we kind of come into that trade day, Had some decent little PLs. This is the start of the day. We ended up with a little bit more than that on all the accounts. And we had no tag anchors. Here's another short that we had called down to the anchors. Break of this down to no tag anchors. Again, first tag magnets, doing a little bit more in the P&Ls there. And then we said we weren't going to do that short until the impulse range fell back down. Again, we were explaining all this stuff per picture, per minute that we possibly can every day on chat. So as promised, we're going to go into the ES trade last but not least. And how in the world did I figure out the exact short before it happened? 260.26.85. And I drew the pretty picture back here. And I drew the big red candle. And I was like, chat, you guys, we got a short right here at the fair value gap on the 5 minute. So we'll go to the 5 minute. We'll check it out. Boom. Boom. Okay. So that was the entry. Posted about a half hour before it came up. We're posting it right here. I said it's going to come up, hit this, and it's going to fail. And I said down to 60.26.85. And again, we have timestamps way before it happened. Can't really explain to you exactly how I got it because it's pretty much magic. So it comes into the -2 VWAP here and comes to do a no tag. And what did I talk about in the last couple live videos? Go look at the do this every day continuation on how algos are drawn. What did I do? This is very simple. It's not magic. It's not super science here. But as we came into this day, this is the deep sea candle, obviously, right? Notice we have the high lows, like always. High low fibbing, high, low. It gave me a golden pocket between the 6.218 and the 38.20 Fibonacci. I'm really big on golden pocket tags if we are stuck inside the candle. So if the candle fails 61.05.31 and it stays underneath that, we are going to come down to the golden pocket before we bounce back up. That's just what we call confirmation of algos finding support. So that's where I picked the short, and that's where the likelihood, again, statistically, our advantage here was to see that and then go to the 1 minute gap above. So let's talk about that. So the fair value gap that we had right here as mass resistance for the entry became a beautiful breakdown for speed right into here. And then I said our short target becomes long entry right off the 60.26.85. Now that launched us all the way up. And I also posted for my chat right here. I said we have a 1 minute gap target here for the remainder of the day if we continue long over the 100 EMA 1 minute. So you see it on the 5 minute there again, but I was on the 1 minute today. So when you see this consolidation right here, this is actually a megaphone reversal pattern, usually a coil, but we call them megaphones right here. These are bullish patterns on the minute. So I seen this coming up and I'm like, oh yeah, we got that one. So we got a beautiful 60-66 hold, 200 SMA, and then again back over the 100 EMA in the green. All of those things led us to our algo gap at 60.92.75 again that we posted for chat. So we came all the way back up for that, and anything above, like we also said before we got off stream, anything above the 100 EMA is going to go. Now, we have a couple different things to worry about for the prediction today. We're coming into today now, right? 5 p.m. because futures just open. So what's the prediction? Well, you notice that we have a 1 minute gap up here, 61.09. So I'm still long up to 61.09 for the week. Probably maybe FOMC. We'll have to see what happens because pre-FOMC destroys the volume and we just don't do a whole lot. We could just be trapped here until we find, whatever else wants to push. Notice that the gap indicator is also giving us right here 60, what do we got? 104 and a quarter. So we have multiple gaps for the algos on the 1 minute chart that it will return to. So we're going to stay long biased again, still shake off that deep seek news. Like we said last video, it's all nonsense. I would say above 692 or 6092.75 support, back over the moving averages, let everything kind of wonk back out, and she'll probably squeeze back up to fill these gaps. So we have a gap right here near yesterday's highs. My assumption would be we'd keep that long on. We'd be going to 6104.25 and 6109 tomorrow. Now, the kicker is FOMC is later on in the day, and a lot of the times the market might just get kind of lazy and do this until the FOMC, until we get it. But because the knee-jerk reaction to DeepSeek was so large, we might not have to wait like that on a regular FOMC. It's technically, it's not exactly how would you name it here, a typical week, let's just say, because something like this, not really the start of the typical week. So let's not assume that it's a typical FOMC lead up. So last but not least, we obviously have this monster gap right here. And the most important magnet target long for me is 6109. That's where we'll end up at the end of the week. I don't care if the FOMC wicks bring it up, the GDP wicks bring it up. We'll come up to 6109. And right now we're at 6090. So I mean, it's not anything crazy. 19, 20 points away from where we're at right now. But we got to attack this gap. So we do have a gap inside the gap, which is the deep seek right here. That's that massive gap down, right? That is a gap. It's on the future start, on the daily, and then we have a 1 minute gap inside that gap, which makes it extremely important. So as we come back down here at the open. We hope to hold some kind of support here. As we build, look for some moving averages to take weight, maybe catch up that 100 EMA on the 5-minute here, and then kick us back up to 6109. I don't want to see that overnight. I'd really like for this thing to just sit still and do absolutely nothing. But if it wants to get the FOMO in and everybody's nonsense buying right back in to go up to that deep seek gap that we do have on the futures chart, well, maybe we get that. I don't know. We'll play reactive to the chart. Trade the chart, not the emotions, as always. So we'll be paying attention to that big old gap there. So back up towards 6109 for tomorrow. We'll see what the FOMC does. We'll tune in. If any of this sounds good, you want to trade with me live with the group, feel free. The link's in the description. Come check us out. We do this live Monday through Friday, and we like to talk about our trades, post them. P&Ls, entry, exits, draw pretty pictures for the chat. It's fun and at least educational. Now, this is not an alert service. As we always say here, this is not something where I spoon feed trades. If your mentality is I'm going to pay somebody a couple dollars a month and they're going to feed me plays to make me rich, you have already lost the game. Please do not keep that mindset. That is the most silly thing I've ever heard, if you think that's real life. So absolutely ridiculous. But as we come into this, we're going to knock out FOMC and educational. So tune in for the next video. We're going to see exactly how those algos produce an FOMC. And if not, you don't want to join the chat, we'll see you on the next video. Links are always in the description. Take care, trade safe, stay curious.